JJ the CPA here. Hope you're doing well. So what if you inherit an IRA or a Roth IRA? You want to find out right away what provisions apply to you to avoid unwanted penalties come time to file your taxes. The first thing I want you to note is you got to get with a tax advisor and a financial advisor. Next, need to know this. You're going to need to pull that money out within 10 years. The date that start is going to be what we would call the date of death. And what does that mean? I hate to talk about that. The date of death is the person who owned that IRA that you inherited from. And then you have 10 years from there. So if somebody were to pass away, let's say on 7/18 of 24, then for that 10-year period, you'd have until 12/31, 34. Okay? You'd have all the way until 34, 12/31 to pull that money out. But you don't want to wait, I don't think, till the end and then decide. You would want to make some decisions up front. I'm going to tell you why in a minute. But the thing is that what could be some urgency is that if the owner, that's the person who passed away, if the owner was under the provision of requiring an RMD, that's a required minimum distribution, just means you get to a certain age and the IRS says, hey, if you got money in an IRA, you need to pull it out. And they have a calculation to determine what is the required minimum distribution. But if they were under that provision of the RMD, what you need to know is if yes, then before year end of the year that person passed away, you've got to ensure that whatever RMD they didn't take, you're taking. How do you know this? You got to talk to the financial advisor who has this IRA. They will know these things, so get with them right away. But what I want you to note is if they had an RMD, then right away you have got to ensure they took out the minimum, and if they didn't for that year, then you need to take it out, and it would be based on that deceased owner's life, okay? Now, the next thing is if you are under these provisions, then for the remainder of the year, so the next 9, you're going to need to also pull out an RMD. That's a required minimum distribution, but it's based on your life, so it won't be as much, it'll be less, most likely. Now, what do we know about the IRS? There are exceptions to everything. So this doesn't necessarily mean it applies to all, but what I want you to be aware of is that if you inherit an IRA or Roth IRA, you want to find out right away, well, what is it that I need to do? So a couple of things. When I talk to a client about this, we kind of talk through the strategy. I would say the lead person to talk to of coming up with a strategy would be the financial advisor. Really, me as the tax advisor is more advising on, well, then what would be the tax ramifications of that decision. So when we're talking about a 10-year period, right? And we're now talking about that when money comes out of an IRA, it is going to be taxed, okay? So we're going to have to pay tax on that money coming out of the IRA. So if you wait all the way until the 10th year, 12/31/34, you're going to pull out a big wallop. Well, if in 30/34 you don't have a lot of income for whatever reason, that may not be a bad thing, but you definitely don't want to be surprised. So you might look at a strategy of pulling out throughout the 10 years as either you need, but here's the other big thing to consider, and this is why your financial advisor really needs to be your lead advisor on this, is you also want to pull it out at the right time of the market. Now, there's nothing we can do on RMDs if you're under that requirement, but you want to ensure that you're paying attention and putting together a plan. 10 years seems like a long time, but it goes by quick. So with that, check out in the body of this video other seminars as well as videos talking about these matters or other matters, and I might be coming to your town doing a seminar with Western CPE and also with my on-demand CPE in various different formats. And with that being said, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. You have a great one. Well, it's the first time I used the board. I think it went pretty good. So you got some videos that popped up? Check them out. Appreciate you.